Before the video will start, LiteFinance has important notice for all IBs from Nigeria. I invite you to participate in Best IB contest. You can win SUVs, $5,000 travel packages, MacBook Pros, and many more money prizes. To participate, register with the link from the description under the video or in the pinned comment. The method of a graphic analysis of Japanese candlestick is the oldest method of technical analysis. It was developed by Japanese merchants in the 18th to 19th century. The psychology of market participants' behavior is determined by the supply and demand ratio, which in turn affects the price movement. As a rule, the asset prices move in cycles because people behave similarly in certain situations. And so, this video will help you understand trader psychology and analyze candlestick pattern to trade in financial markets successfully. So a candlestick chart is a style of a financial price chart organized as candlestick representing price movements over a particular time. The meaning of candlestick analysis lies in the name itself. The principle of a graphical illustration of a price movement is a sequence of candlesticks which define the market sentiment and price direction in different periods, from 1 second to 1 month. Originally, a rising bullish candle was white and a falling bearish one was black. With the development of technology and the advent of multifunctional trading terminals, traders and investors have the opportunity to paint candlesticks in the colors that suits them. The candlestick analysis can be easily combined with other types of technical analysis, which increases the chances of making a profit. As a rule, a bullish candlestick showing the price rise is white or green. It demonstrates opening and closing levels, and the bearish candlestick is usually black or red, meaning the price decline. So this candlestick shows opening and closing price as well. Upper and lower shadows show the price high and low. And so in general, candlesticks and bars show the same information for a particular time. And so we have the price high, price low, we have the open price, close price, and so you can see that this information helps traders to determine the trend direction. Then spot good entry and exit points, predict the price reversals, and so then measure the volatility and monitor other market changes. And a candlestick chart is a technical tool that reflects the dynamics of the price of various financial instruments in the stock, currency, cryptocurrency, and commodity markets. And so the key motivation for traders is the opportunity to make money. To do this, each market participant must be able to analyze price movements and understand the trader psychology. So a candlestick chart is a convenient and practical tool that displays price changes, thanks to which traders and investors can easily define the trend direction. And so the meaning of candlestick formation is to display information about the price moves. So for example, a red or black candlestick means the bars are dominating at the specified time. A green or white candlestick means that the bulls are control of the market. And so there are also doji candlesticks that mean market uncertainty. So doji often appears when the market is in the overbought or oversold zones, being a reversal pattern. So there are several types of doji patterns, such as a gravestone, dragonfly, long-legged doji, a rickshaw man doji, and a tri-star. So when analyzing a candlestick chart, it is also important to take into account the time intervals of emerging candles, or the so-called time frames. So the time frames range from 1 minute to 1 month. Short-term time frames, 1 minute to 30 minutes, are more vulnerable to market noise, including small corrections and intraday volatility. The longer time frame, the more accurately you can determine the trend, and candlestick patterns work more efficiently. And so this is due to the fact that candlestick formed in a shorter time frames can be just a shadow of a candlestick in a longer time frame. And so let me give you an example of the UK Brent chart. So this 30-minute chart shows the highlighted area of action of one candlestick in the daily time frame. And so in a shorter time frame, we see an evening star bearish reversal pattern with a hanging man pattern inside. So looking at a 30-minute chart, a newbie would sell and lose money, while an experienced trader looking at a daily chart would see a bullish flag price pattern forming with a bullish momentum daily candlestick. And so this candlestick was a signal for a soon breakout of the flag, and the trader, having waited for the correction to finish, would open a buy position and make a good profit. However, the trading strategy is very important, and so the trading strategies are short-term, medium-term, and long-term. And in the first case, one could use a high-risk day trading strategy combining Japanese candlestick analysis and price action patterns. In the second case, one trades more conservatively and the position could be closed in a week, but the profit from one trade will be higher. And so now let's talk about the types of candlestick patterns. So there are different types of candlestick patterns composed of one or several candlesticks. Here I will describe basic types of candlestick patterns. So let's talk about now a single candle pattern. As you see from the name, a single candle pattern is composed of one candlestick. So single candlestick pattern can signal a trend reversal. For example, a hammer, an inverted hammer, a hanging man, a shooting star, a doji, and many others. There are also continuation patterns signaling the ongoing trend to continue. So now let's talk about double candle patterns. And so, the double candle patterns consist of two candlesticks. Based on how the candlesticks are located, you can anticipate the future price movement. So for example, such patterns as engulfing dark, cloud cover, cloud break are strong reversal patterns signaling that the ongoing trend is to reverse soon. So now, the triple candlestick chart patterns. So the triple candle patterns are composed of three candlesticks, and so the most common reversal patterns are a morning star, an evening star, a tri-star, doji bottom, three black crows. And so continuation patterns are three white soldiers, rising three methods, and so on. And so I guess that would be all for this video. Thank you for watching, hope you learned something, hope you liked this one, and I'll see you in the next video. Take care, bye.